Tomorrow is arguably the biggest day of the trading month. We have the CPI report in the morning, followed by a press conference in the afternoon with Jerome Powell. It's going to be an action-packed day to say the least, and volatility is expected all over the place. But let's talk a little bit about what this CPI print first tells us about the market. Well, again, CPI tomorrow will give us an insight as to whether or not inflation is coming down, if it's staying sticky, or if it's actually accelerating. And we'll get that figure in the morning. Again, the forecast is currently 3.4% year over year. Now, if this number comes out lighter than expected, if it's 3.3 or 3.2, the dollar index will probably drop, stocks will jump, gold will jump, etc. Now, if the opposite happens, if you get a hot print, meaning a higher than anticipated, maybe a 3.5 or a 3.6, that would be scary to the markets, and the dollar index would probably jump higher. Let's have a look at the dollar index while we're on the subject. So here's a look at the daily chart of the DXY. This is the dollar index against a basket of other currencies like the euro, the pound, etc. And what we can see here is that the dollar has had so far today, its third green day in a row. This is coming off of the jobs numbers that came out on Friday, which were hotter than expected. So some strong jobs numbers. And the question now is that preceding a hot inflation print? Remember that a lot of people getting jobs means a lot of people going out and spending money. A lot of people spending money causes prices to go up, and inflation could stay sticky. We'll find out where the rubber meets the road tomorrow, whether or not that is the case with this inflation figure. And again, right now, price action is telling you that the dollar kind of wants to break out. We'll see if that materializes further with tomorrow's CPI or if it reverses. And I want to make a clear distinction before I go any further in this video. Please understand that I don't try and forecast what inflation figures are going to be beforehand. I get questions every single month on the CPI and jobs numbers day. Hey, what's going to happen to gold? What's going to happen to the dollar? And the answer is, in the short term, I don't know. But the core component here is trading the aftermath is really important. And just a reminder, we will be live streaming the event. If you'd like to turn on post notifications and hit the thumbs up button on this video, I'd greatly appreciate it. And hopefully we can see you during the live stream tomorrow. I wanted to mention, so with the dollar index here, 105.4, we're breaking out. Strong close today could be an indicator that perhaps this breakout has more room to the upside, and at least there's some appetite in the short term for dollar bullishness. That being said, I don't predict it's going to happen with CPI. So if we get a really cool print, this could just be one big false breakout. So here's what I'd be looking for tomorrow. If you get a strong close tomorrow, like if this candle stays looking very bullish, any pullbacks, probably short-term dollar strength continues, because that would give us a double whammy. Strong jobs and hot inflation. Dollar index probably rises for a little bit. But if you get some lackluster inflation numbers for the dollar bulls, meaning cool inflation, watch for a break back underneath this 105 level. That's what I'll be looking out for going into tomorrow. I am long gold right now, so ideally, I wouldn't mind if the dollar drops a little bit. Same thing with my long position on TLT, which I'm in the red on, but a cooler dollar or a weaker dollar would actually be likely good for my TLT position. So we'll come back to that in just a second, but back to the dollar index. If you do see a hot print, do not be surprised if you see a straight move up to this 106.4. But what would get really bullish from a price action standpoint is if that happens, you do see a breakout above 106.4. That would be uncharted territory for the last several months. That would be a recent high in the dollar and could actually head back up to like the 107s, which would be really interesting to see. Not so much for the stock market, which would really hate that. Speaking of the stock market, the dollar has some impact here. If the stock market sees tomorrow that inflation figures are not cooling, it could throw some cold water on this, what has been really strong upward trend. Again, the inflation story is very important to whether or not this stock market continues to push higher or does not. Because if inflation comes out hot tomorrow, stocks are going to say, well, hey, you know what? The Fed's not going to cut rates for a little bit longer, and the stock market has areas of it that are sensitive to borrowing costs being higher and would do well if the market saw interest rates come down. So we'll keep an eye on this. I currently do have actually a short position on the Russell. I'll show you this. This is the IWM. Speaking of stock indices, I went short the Russell yesterday. This popped up on the Edgefinder's top setups page. You can see here, well, it was here. It's no longer there, but there was a Russell setup actually even earlier today on the live stream. We can refresh just to see if it's popped up there, but I think it might have gone away. Yeah, it's gone for now. Anyways, the Russell was a sell position earlier on in the Edgefinder, and I do still have that trade on from yesterday. I have trailed my stop loss just above this market structure point into profit. So I can't lose money on this position, which is a nice spot to be in. But if this breaks through resistance, I'll be out of the trade for a profit. Otherwise, if we roll over, I'll continue to hold on to the trade. I think that the Russell, why the Russell, why short, and why now? Well, I'm short the Russell because predominantly economic data cooling off in tandem with sticky inflation is a rough environment for smaller companies trying to grow. So I like the short setup that materialized yesterday. Price came up into this resistance point and I went ahead and picked up a short position. So we'll keep tabs on this one. If it wants to keep going lower, I'll trail stops further. And if it reverses, then I'll take profits. So that's my update on the Russell. And the NASDAQ is just chopping back and forth, but near all-time highs here today. Look at that reversal intraday here on the opening bell. We pretty much saw the NASDAQ shoot back up and probably driven. I'm just going to take a wild guess. It's probably by NVIDIA. Oh, maybe not. NVIDIA is actually red on the day, but I did notice that Microsoft, I think, is up. Yeah, Microsoft is up today. And in fact, let's pull up the heat map just to see. And actually, interestingly enough, there's some very thin leadership today. It's basically Apple. And let's go have a look at what happened with Apple here. So look at that, Apple up 4%, 5% on the day. That's actually a huge jump and is helping to buoy up the indices here a little bit today, especially the NASDAQ. So very interesting to see that. I'm not quite sure what the news is. Let me find that out. And while I can't find the specific reason, there's a lot of innovation that's been kind of released in the last 48 hours from Apple as they're having their conference here going on right now. And maybe James on the editing side can pull up an article for what's popping for Apple today. Because again, up 5% and it's definitely pulling the market higher. Moving on to gold, I am still long at this area of support. Hasn't moved a whole lot from my initial trade, that big sell-off on Friday. I took an entry, I was a little bit early, but we've bounced back, and on this overall position, I'm about break even. Still holding on to support. If this breaks tomorrow, by the way, if you get like hot inflation reads that, indicate that the Fed may not cut rates, it could put pressure on gold. And if that happens, I will stop out. Otherwise, if we do get a nice pop, then I'll continue to hold on to my gold trade and see if we can make a push back towards the highs again. I think that it is very possible, especially with the recent cool down in economic data that we're seeing. We continue to see Edgefinder have a bullish reading for gold overall. So I like the trade and I'll stay in it again, unless we break support. By the way, if you're not already using the Edgefinder and you'd like to get 25% off, our sale is ending soon. This week, we extended it just a bit longer here for the big CPI and FOMC day. So if you'd like to get 25% off the Edgefinder before all the action happens tomorrow, trade alongside the Edgefinder. It's a wonderful product that allows you to look at a ton of fundamental data. And if you are serious about your trading and looking to get into fundamentals, this is a one-time fee to purchase the product. You don't have to pay us monthly. It's one time and then you have it. So if you see yourself trading for the long term, pay the fee one time before the price in the Edgefinder goes up. Especially with this discount, it's a great time to pick a copy up and start trading with data on your side. So take advantage, click the very first link in the description down below to speak directly with a real person on our team who can set you up with that discount and answer any questions you might have about the tool prior to you purchasing it. Quick look at the commitment of traders data. I know we looked at this earlier in the week, but just a reminder, we still have gold as our #1 overall bullish instrument on the COT data, which I thought was interesting. This is a longer term reading. The net positionings don't usually change that much week to week, but we also saw gold get materially bought in the latest filing as well. So for those of you who are watching gold and silver and the dollar, here's some key insights from the commitment of traders data. Seems like buying for all three right now, which could suggest some risk off kind of sentiment, especially when you also see oil and stocks getting sold pretty aggressively. I thought that was kind of interesting to point out today. Specifically, I'm talking about the net percentage change week over week column, which shows you, again, buying or selling from institutional money according to the commitment of traders data, non-commercials presented each week by the CFTC. Despite the fact that I'm a little bit cautious on stocks, I do still want to acknowledge that going into July and August and the rest of June is still expected to be a positive month overall for stocks in general. So we'll have to see what CPI brings us tomorrow. It could really reverse the bullishness that we've seen recently, or things could just break to new highs, in which case, again, if you get really cool inflation data, perhaps stocks are back on. So we'll have to keep an eye on that. Tomorrow is a huge day, and I'm also very much anticipating or curious to see what Jerome Powell has to say during his press conference. How has the recent data impacted their thoughts on when rate cuts could or could not happen? And how do they feel about the progress or lack of progress on the inflation story? Speaking of the inflation story, the blue column here is the US. And when we take a look at US inflation, you can see it hasn't really come down meaningfully. We are still a distance away from our 2% target. And the Fed is, again, very much going to be watching that number tomorrow. Is that inflation figure coming down? Or is it going to stay stubbornly high or even rise? Those are interesting scenarios, because if that happens, suddenly the dollar becomes very, very strong again if inflation in the US is rising, while other counterparts, look at the UK, look at Europe, and you can see inflation for those places is more materially coming down. If inflation in the US is staying flat during that same period of time, the dollar very well could have some strength against its peers for a suspended period of time. And here's a list of all of my current positions. I like to do this in most of my videos, so if you're not already subscribed to the channel and you appreciate the transparency, make sure to hit that sub button. And also, if you're looking to trade with a better US regulated broker, if you're in the US, or if you're outside of the US and you want to trade with a regulated CFD broker, there's several listed down below in the description that are a great fit if you are looking for, again, something regulated, something that offers a great service, low commissions, low spreads, and special sign-up perks. You can find out more details about each one of the brokers that are partners of the channel down below in the description. And if you choose to use those, you'll be supporting the page, because we do get some kickback from those signups, which helps to support all of the time and effort that we put into these videos. So thank you very much for watching. Have a great rest of your day. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.